Okay, here's a potential trade setup, and I'll tell you what I've done on it, and I'll also talk through what I think about it. Okay, we get the crosshairs on so I can point with the crosshairs on the chart first. Over here we can see this candle had a trade alert. It's a trade alert of a bearish candle with the bull bear butterfly down at this level here, which is, if we look on the left, let's come over here and just clear that off the screen. You can see this is the data window here. So on the data window, which is the, there we go, the 30-minute candle, and it's 8 o'clock. And the bull bear butterfly is reading minus 13.25, so that's quite clearly bear. If you look at the chart itself, it's got a consolidation. So we're still in consolidation. We're looking for it to break that consolidation. We're also looking at the other indicators. So litmus is down, which is bear. We've got MTrader 3 down, which is bear, MTrader down, which is bear, STrader down, which is bear. We got the trade alerts, you can see them here, for each of those, the STrader, the MTrader, and the MTrader 3. It says sell 0.62 at 113.32. That's a sell stop at 113.32. And I've got targets of T1, T2, T3, T4 and T5 respectively. T1 is 113.25. Now what I've done is I've put on 5 small trades of 0.1. Okay, so this says we can trade up to 0.6. I've traded 5 of 0.1. Those 5 of 0.1 I've decided to allocate each one of the targets here. You can see 113.25, that's T1, and then 19 is T2, 3 T3, T4 and T5. So now we're waiting to see what happens really. I've put the stop price on as described in the suggested stop price. Remember, this is a trade alert which says here's a potential high probability trade. It doesn't say this is a trade that will absolutely give you money, because nothing can predict the future, and therefore there's nothing that can say this will absolutely give you money. All it will say is here's a high probability trade alert, and here's the suggestion for the stop and the targets. As a trader, it's up to you to make your decision if this high probability trade alert is high probability to you and meets your own trading plan. So this is what I've done. As I said, I've put it on with 5 trades targeting T1, T2, T3, T4, T5, and now wait to see what transpires. Is this a good trade alert? That's the next question. Well, not as good as one might like, and the reason why that's not as good as one might like is because we're in this consolidation zone, number one. Number two, we're trading the UJ, the dollar yen, during the UK London session. Trading the dollar yen in the London session is less good than trading it during the American session, and the reason for that is it's dollars, and Americans are interested in dollars, and the Brits are interested in pounds, so it's got nothing to do with pounds. Okay, so this may still follow through, it may still work out, but I'd be happier with it if it was a trade alert that was in the beginning of the American session. It could also be good during the Asian session because it's a yen, so it's a yen pair, and that would be good in the Asian session. So here we are, we're actually trading it during the London session, which has arguably less potential for following through, because arguably there's less interest in this currency pair during the London session. Anyway, I hope that explains what I'm thinking here, and you can see that actually it's beginning to move, and we're waiting to see what happens. Another reason why I'm less keen on it is because we got this consolidation level, and I would be happier with it if it had got more of a clear move down, and you can see from the Darvas lines where the lines are. The supporting case is this Darvas line here. The support here is lower than that support, so we've got a lower low, and this resistance and that resistance, we've got a lower resistance as well, a lower high. So that supports the potential for that to go through. Now, if you look at this, we've got the trades on here. The next target is, we took 113.25, so we've already hit T1. So actually we've already just banked, while I was talking, we've just banked the first little piece of value out of this trade. We're now looking to get T2, which is 113.19, which is the next dotted line you can see here. So we'll just leave this trade to develop and see what happens. It is looking like it is following through. It's penetrating the support line of the Darvas. The candle isn't complete yet. It's a 30-minute candle, and the time at the moment is 8:57, so that candle won't close for another 3 minutes. Let's wait and see what happens. So let's just follow this trade a little bit more. We've had the 30-minute candle close. It's now 9:04, and we're seeing a retracement back up again, like it's rejecting this support level. It's still not clear whether it's going to reject that or not. Typically when this occurs, we've got this candle here, the 30-minute candle. If it retraces the whole of that 30-minute candle, then from my own personal point of view, I prefer to close the trade out completely. So the high on that candle there that we're looking at, which is the 8:30 candle, the high on that you can see is 113.34. So we want to move the stop now to 113.36. So that's what I'm going to do. I'm going to proceed to move the stop on each of these. And I want to get it as close as I can, 3.6. Okay, so 3.6 I'll have. It's just a process of going through and setting it all up. Now the reason I'm doing that is because it's retracing. I don't want this trade to continue if it breaks that level there, and it looks like I might not be able to get the stops on because it's already coming back. I'm watching the trade as I'm doing this, because if I need to close them manually, then I can do that. So at the moment I'm getting all the stops on at more or less the correct level, the level that I'm targeting, and we will just see. Now the reason I chose that level there is the high plus the spread gives us the room for the trade. So if it breaks that high, allowing for the spread, it will close out at this level here. Remember, we've closed one trade at T1. T1 is the first and easiest target to reach, and I do know traders who will trade only for T1. Other traders will trade for T2. T2 gives you more profit for the trade and is therefore a better target to use, but T1 is more likely to get hit. Right, let's just leave this trade to play itself out. We'll wait and see now what happens with this trade. So you can see this is beginning to have a reverse engulfing on this candle here. That doesn't look good at all, so you could manually take it out, or you could just let the trade take it out. I would at this stage choose to take it out. If it shows any more movement up, it's very, very difficult. You can see it's penetrated this. The setup wasn't right because of this rising trend through here. It's such a tricky trade. It wouldn't be one that I would normally have taken. I would rather have something where if you look over on the left up here, you can see how we've got trades breaking out coming down there, and that would be a more obvious trade to take. I think we're going to lose money on this. We'll wait and see. We'll have got T1, but we won't get anything else. But it all depends. It's not over yet. Let's have a look. Has it penetrated there? The high is 113.35. Our other high was 113.34. So it's gone 1 pip above. Okay, now I don't like the look of that, so I'm just going to close it out at this level here anyway. Now looking at this, you see we've got this is a bear candle, and this would be a bullish engulfing candle. It's not closed. It's still got a long way to go to close, and maybe I've finished the trade too early, but I'd rather be done with it and out of it and see what happens. Now if you look at the account history here, you can see that we made off the T1 we made 526, and off of the 4 that were left on we lost 4 plus a bit, so we've roughly broken even out of that trade by taking some of the money at T1. And that's it. Now I'm going to wait and see what happens, see if there are any other trade alerts that arise. You can see here we do have a trade alert on the dollar yen 60 minute which says sell at 113.24. Okay, since we've got that order on based on the 60 minute, let's have a look at the 60 minute chart and see if that gives us any more confidence. So here again we've got a difficult decision to make. We've got a low here, that's support line coming up, support line coming up, support line coming up. We've got this level here which is a high, a lower high, but now a higher high. So this has got a very mixed signal going on. We've got a higher high and we've got a higher low in this zone here. So there's a potential for retracement back through all of this level here, back up to some level which it was at 2 days ago. Difficult trade. If you wanted to, you could put on a sell stop on that trade alert that we've just got here, and the way you'd do that is you'd press the order like this. You say it's a pending order, it's a sell stop, and the price we've got for the sell stop is 113. Here we go, 113 point. Can you read that there? 113.24, and we want to put the stop loss at 113 point, and the stop loss is 41. Okay, so this would be how you'd place that trade there. So now we've got the entry and the stop on. We're now in a position, if we wanted to add in the other information. Let's do that for some extra trades as well. Get it all set up. So it's a sell stop, and we'll place that one on as well. And we'll add one more in, so we'll have 3 tranches because of a caution about what's going on here. We're going to have another pending order, which is a sell stop, which is at 113.24 with a stop at 113.41. place. There we go. Okay, so now we've got those trades on. You can see the trades are sitting waiting for the trade to activate down here. We could then go through and put on our targets of T1, T2 and T3. So let me show you how you do that. You modify the trade, Okay, so we've got it sitting there. We want to modify that. We want to put the target in 113 point. T1 is 12, 1, 2. We modify that one. We come in here and we modify the next one. So we modify the next one. And we're going to have the target for the next one at T2, 113 point. So T2 is 02. And we modify that. And we're going to take the next one, targeting T3. Modify that. And we're going to put the target on here. 113 point. We're going to put the target in here of 113 point. And then we've got T3, which is 9, oh, it's 112.94. Okay, 112.94. They are 112.94, like that. So we now have the stop set there, the target set there. This trade won't activate if it doesn't break this level. Now you've got a decision to make again on this trade. You can expire this trade at the next candle. This is a 60-minute trade alert at 8:59, basically at 9 o'clock. So 10 o'clock is you could expire it. So that would be another thing you could do, is make sure that you protect that trade. So we come back in again now. Now we've got all of the stops in place. Now we've got all the targets in place. Now we can get back and do the job of modifying the time, because it can be a time costly procedure. So let's just put this all on. You can do, so it's going to be today, the 17th. There's a lot of traders that don't trade on Fridays, I should warn you of that. And we're going to change this time here to 09, and that's going to be 59, and that's going to be 59. So at the end of the hour, that's when we want to say we're not interested in having this trade continue. Now this platform is not letting us modify that, and it's not letting us modify that now because the open price is presumably, the trade open price is now too close, and it won't let us get in to modify that. So I'm afraid you're just going to have to allow for the fact that the timing of trying to put the expiry on it is all happened after the event of getting too close to the price. So I'm going to have to close that and just wait, which means I'm going to set my own personal alarm clock, and if at 10 o'clock these trades have not triggered, I'm going to take them off the table. Okay, I hope that helps you, and that you understand what I've done and why I've done it. Okay, so you can see here it's now 9:40, so we're 40 minutes through the hour candle. In the meantime, we've picked up these trade alerts while I was out of the trading room. So there we are. We've got two 15-minute candle trade alerts on the same currency pair at 113.26 with a stop at 113.36. You could be looking at trading those. I've decided to leave those ones alone for the moment for the reasons we've already discussed, and I'm going to leave the hourly trade alerts in and the hourly trade orders in. So as far as I'm concerned, I'm happy with that. If by 10 o'clock they haven't activated, they haven't been entered, then I'm going to close them out, take them off the table. So yeah, there you go. Just wait and see what's happening now. Just keep waiting and seeing. That's all there is to do. Okay, so while we're talking about this, you see that candle, big candle down, and it's called a flagpole. It's a bear flagpole. Comes down, and there's then this big consolidation zone. You can see where all the candlesticks all the trading price action is all going sideways. Typically after a flagpole like that, the theory is that there could be another flagpole going down from here. Being a Friday, that's possible as well. Things happen on Fridays, sometimes unpredictably. But anyway, that's the idea, that it might go down the same distance again. In the meantime, you can see that we are now in the trade. We've got the shorts on. All three of those are now activated. You can see they activated at 9:55:05. So 5 minutes before the end of the hour, we're in on the trade. And once again, there's nothing much to do now except for wait and see how it develops. We have our stops in, we have our take profits in. Now it's a question of waiting, and pretty much we're going to wait now and see what develops out of this. It's now 9:59. We're waiting for the clock to tick over to 10 o'clock. The moment it does, I am going to move my stops to the high of the current hourly candle plus a few pips. There we go. Right, we've now clocked the hour. You can see we have other trade alerts kicking off on the Aussie dollar and the euro dollar on the 60-minute. There are trade alerts on those. If I wasn't talking to you about this particular trade, I would now be taking attention to that. But for the moment, because I'm just talking about this trade, I'm now going to change my stops on here. So my stop is the high of the prior candle. There we are, that's the prior candle. The high is 113.35. add 1 pip plus 2 pips for the spread for conservatism. So 113.38 is going to be my new stop. 113.38, and I'm going to do that with all of them. And there we are, they're all done. The targets are left as they are. We now just wait and see what happens. The trade's on, the stops are moved to where I want them to be, the targets are set to where they want to be. I've arranged to go and have coffee, so I am now going to leave this completely alone and go and have coffee. I may well be back after 11 o'clock, which will be the next time when I'd actually care about looking at this and to do any further trade management, because we're trading the hourly candle. So for the moment I'm not interested, but as I say, I'm not likely to get back again by 11 o'clock. I'm probably going to be out until 11:30 to 12 or something. Anyway, I'll give you an update later. So here we are with the trade on the dollar yen. You can see how that's been developing. I've got back from my coffee, so that's rather good, and we can see that we're in profit. We now have these two trades here and here. Oh, my computer's going slowly again. There you are, but never mind. So they're still on the table, and you may recall that while we were setting up that trade, there were some Aussie dollar alerts. I put the trades on for the Aussie dollar, and you can see the prices we're at on that at the moment. That's still got the stops in place. So going back to the dollar yen, we've completed now another hour. The prime now is 12:02. We're pulling back from the level that we reached at midday. We don't know yet whether that's going to retrace all of the way, but if we have a look at the account history over here, we can see that we've banked one of the Aussie dollars there that we traded off the 1 hour chart, and the other ones are waiting to hit. So we hit T1, but we haven't hit T2, which is still sitting down at this level. It's now here on the 12 o'clock candle. As I say, it's 12:07. It's pulling back from there, and it may well pull all the way back. I want to move my stop to the top of that candle, to the entry point, so I'm going to do that to make sure I don't actually lose any of the profits that I've got on the first trade, which hit T1. So in the meantime, let's come across here, and we're going to click on that. So I've now moved the stop to 2.3, which means that even if it comes back and stops out, we've made a 1 pip profit on there. Okay, so that's always good to do, moving the stop to 1 pip of profit. Whatever happens now, we've got a very small profit, and T1 would have taken the money. As you can see also that we got in some trades on the Aussie dollar. Same thing, small lot sizes, 3 of them on small lot sizes. I put the stops on there. I was rushing out the door to have coffee, so I didn't put any targets on it. We'll have a look and see. It might have been wiser to have a T1 target on there, but no worries. So let's just bring up the Aussie dollar, and we got in, I believe, on the hourly chart from what I recall. So we'll bring that one up, and we just scroll down here. You can see, if I go back to 10 o'clock, which is when we were getting into this trade, you see there's been a lot of trade alerts that have happened since then while I've been out having coffee, and all of those that, you know, basically I've not even had a chance to make a decision about, but that doesn't matter. There's trades happening all the time, so there's lots of opportunities. We had a euro dollar there, Aussie dollar, there we are. So that was the trade I placed on the Aussie dollar. Placed it on the hourly chart. I could have traded on this account of 0.57 based on 0.9% risk on any given trade, which I describe in detail in my book about why I do that, and also on other videos. So anyway, the entry point was 7692, the stop was 768, and then we had a T1 of 7698. I believe that actually we penetrated 7698. We do, so I'm actually going to take one of those off at 7698 now. So that's gone. So that's banked one at the T1. Now, as I say, when I went out the door, I just put the trade on and then went out the door, so I didn't put the target on. So that's T1 taken care of. Now we want T2 at 7705. Okay, so we can now modify that Aussie dollar trade there and put in 7705 as our target. So we just do that, 7705, that would be a T2 target, and it says it wants that to be at least 60 pips away, so it won't let us modify. So we're going to actually have to push the target a little bit further away if we're going to put it on an automatic take profit. Let's try that. That will do. So that's good. And that's put the take profit at that level there. You can see it's put it on the chart. And then the other one we want to put on is the T3 target. So let's just do that. And our T3 target on that particular trade here, you can see, is 7710. So we just put in 7710 in here. Now I know I'm being particularly prudent on this. We could be looking for more money out of it. 7710. There we go. So that's the T3 target. So if it goes up and hits that, now this is quite realistic, as you can see, because we've got a resistance level there and a resistance level here where I'm pointing the cursor now. And that means that it's come up from the levels that we entered off of this trade here at 10 o'clock and gone up to the upper level of the resistance level. That's entirely reasonable sort of place to take profit, because we can see in the past when it's reached those levels it's been sold. So until it breaks above the top of these resistance levels, we don't know if it's going to break higher. The theory has it that this is a flag trade, so we've got a consolidation level here, the big flag, another consolidation level there. We're looking for the breakout above this level here, but we don't yet know whether that's going to follow through or whether it's going to reject at the resistance. So taking profits at these resistance levels is a wise thing to do. It puts money in the bank. Okay, so that's how it is. I'm going to leave it now. Everything's set up. We've got all the stops in place. We've got all the targets in place. I'm going to move my stop on the Aussie dollar up to break even, just because that way I can then go get on with other things I want to do, like walk the dog. So I just modify these things so they're in place and taken care of. Now you can see my computer's running particularly slowly at the moment, but with this style of trading, actually it doesn't make any difference, because we're getting in there, we're putting all of the orders in and we're taking care of it. So let's just put that stop in as close as we can to the entry, 76918, 76918. I'm going to put that down to, remember it was 7918, so let's bring it down to 21 or something. So it's just above the entry price. There we have it. Right, now we've got everything covered off so that whatever happens on any of these trades, they will be stopped out before they make a loss, and they've got all the targets on. So now we can just go and get on with the rest of what we want to do in our lives. If we wanted to, we could start taking other trades, but as far as I'm concerned at the moment, I'm happy. It's 12:17 now, and I'm not really interested in looking for other trades until about 1:30, 2 o'clock, as we begin to open up with the American market. So it's an ideal time to go and have lunch. So here we are at 12:52 now, and just glancing at the screen. So the Aussie dollar trades have hit target and have banked the target. The dollar yen trade is still in play and waiting to see if it will go down and hit the targets. All looking good though, quite happy with that. And yeah, bring you up to date a bit later on. Bye. Okay, so here we are now a little bit later. It's 13:58. That means it's 2 minutes before the end of this hour. Which obviously occurs, well, 13:59 now. Okay, and the dollar yen trade that we had came nearly all the way back up again, but didn't take it out at the stop, has gone back down again and has hit the T2 target. So now, as you can see, we've got T3 target just below that as well. We're waiting to see if it goes to that. In the meantime, we have banked that, and the Aussie dollar, the other trade on the Aussie dollar, looks like it's banked that at T2. Let's just have a look at the account history. You can see here that the dollar yen, 1341, that hit the T2 target and put away 1471. You can see the number of pips that was, so it's 113.02, and we got in at 113.24, so that's 22 pip trade there. I find when looking at the averages, the average number of pips achieved usually is about 20 to 25 pips, so that's pretty good on a trade like that. The other Aussie dollar trade came out at 12.50, it looks like. So we got the two Aussie dollar trades. That was T1, and the one above here, this one I'm pointing at now, that was T2. All looking good, so we'll wait and see now what else happens. So here we are now, it's 14:03, and you can see that the trade has smashed through T3 as well, so that's banked that. It's also smashed through T3 on the Aussie dollar. Come back and have a look at the account history, and we put that trade at T3 out there, and the Aussie dollar trade at T3, that's also closed out at 1433 seconds. So there you are, that's that trade completed and done for the day. I'm going to download those and we can work out how many pips we've actually made out of those trades. Essentially they were all entered in the London session, so that was working basically from 7:30 till 10:30, as you can see popping in every now and again, but basically I went out and spent time out and had coffee and with friends and have had lunch and so on and so forth, just letting it get on with itself. So the trades were actually dealt with to all intents and purposes by 10:30. Okay, so now we're going to get the trade details. This is how you're going to get the trade details for the trades we've just been doing, and this is on the dollar yen and the Aussie dollar trades. I'm just going to load them into here. I'll show you how you do it. Basically it says in here, in the trade calculator, on the trade summary sheet, which is the fourth sheet, in MT4 terminal, account history, right click, detailed report. Okay, so we go to account history, right click it, and we pick up what we need from there. I'll show you now. We come across to that. and we've got the account history here, as you can see. So I'm going to right click that, save as detailed report, and you can see it wants to put it down into this complicated folder, app data, roaming, meta quotes, and so on, with a big long number on it. You can do that, or you can put it somewhere else. I'm going to put it somewhere else, so I'm going to put it into my folder trading strategies, and I'll save it there as a detail statement. I'll give it a name, detail statement USDJPY 17th 03 2017. Okay, so that's fine. Save that. Now we're going to open that. Here we go. Okay, so what we're interested in really is the trades on the 17th, which is all of these trades here. So we're going to select those trades for the 17th like that, and copy them and go across to the spreadsheet here, and we're going to paste. Now we're going to paste those into here, so paste it into there. There we are, and it gives us the profits on each of those individual trades and includes the losses. Do you remember we had that as well? I had a trade earlier on this morning that was trading on the DAX, so that one lost us a little bit of money. There you go. So that's actually what we ended up with. So at the end of that, we've made 75 units of currency, £75 for the morning's work, and a total number of buy pips won of 40, sell pips won of 71, loss pips are 9. So our net pips altogether is 102 pips for the morning's trades. As you can see, we were doing that with just 1 unit per pip. So that would be $1 or £1 or whatever currency that you're trading in. And we banked 102 pips altogether. So you can get a feel for that, okay? So I hope that was helpful. I hope that explained how you trade and see how it worked with actual live trading. This is John Cato, 30 Minute Trading, wishing you happy trading. Bye for now.